Hi, I'm Don Mecoy. I'm the business editor of the Oklahoman and News OK, and I'm joined today by Adam Wilmoth, who is our energy editor, and we're here to talk about earnings. It's earnings season, and you have read with your bloodshot eyes many earnings reports over the past several days for Oklahoma's energy companies. What's the big takeaway that you've had this earnings season?
Well, we've had a lot of big negative numbers, but not a whole lot of surprises. Most of the companies have been pretty in line with analyst expectations, with their guidance. And we've seen that with the stock prices. Stock prices have moved a little bit up or down the last few days, but nothing too surprising. What we have seen for the oil and natural gas producers, most of them have had very large write-downs, some of them multi-billion-dollar write-downs, based on the lower price of oil and natural gas and how that's affected the value of the company based on the oil in the ground. It's a non-cash charge, it's an accounting charge. It still matters, it's still important, but it's not money changing hands for anybody. And so most of the companies have pointed out that they've reduced their cost and that they are working to make the most of a very difficult situation with the commodity prices.
Well, and for instance, we've seen several companies where if you just look at their operations, at what they're generating, the revenue and the expenses, they're actually profitable on that side, but these huge write-downs on the oil that's in the ground, these assets, because of the low price, that's really what's slammed their earnings.
That's right. And for the bigger companies, it matters, but they've got enough cash, they've got good enough balance sheet that they'll wait it out. And when prices go back up, they're going to have to write up the same write down, and it'll inflate their profits, and it'll make them look really good. For the smaller companies that have credit limits based on this number, it's much more significant, much more important immediately.
You were saying there weren't very many surprises. It was kind of what was expected, although we did have a little bit of a surprise with Sandridge. As they released their earnings, also announced that they'd made an acquisition.
That's true. They pretty aggressive move, spent $190 million to buy assets in northern Colorado. Gives them a second area. Most of their operations now are in the Mississippian play, northern Oklahoma, a little bit in western Kansas, but mostly northern Oklahoma. And that's an area that had looked very promising. As they've gotten in there, it's found a lot more challenges. But they see that this expansion in the Niobrara in Colorado, they tout that as good assets, good similar. It's a little bit more in the mountains, but a little similar rock, similar to what they've already done, what they're already used to, and they see it as a pretty nice way to expand and have two areas and not have just everything in one area.
And that did appear to have somewhat of a positive effect on their stock price as we sit here Thursday afternoon. It's taken a little bump, and I guess it's because of that.
Yeah. I think that investors are pleased to see that the company is moving, is active. Their stock price has dropped down to less than 40 cents, and they've been in danger of being removed from the New York Stock Exchange. There's been a lot of questions about that company, and to see them being active, to see them moving, to see them expanding, I think shareholders are pleased with that.
And the bottom line for all of these energy company earnings, it's essentially if the price of oil would bounce back somewhat, their earnings would just recover almost immediately, wouldn't they not?
Sure. They've all reduced costs, they've all reduced spending, they've all focused on getting the most out of what little operations they're doing. And what is interesting is even with all that, most of the companies have continued to increase production, even though they've cut their drilling, their rig count in half. Some cases they've cut the actual wells that they've drilled in the quarter down to a third, and they're continuing to increase production, which is a lot of it. Some of it's improved technology, some of it's improved techniques, some of it's just focusing on the best of the assets in the area.
Well, they've gotten really efficient at doing that.
They certainly have.
And I know Adam has a column coming up that's going to be in tomorrow's paper. He's also going to have a story on Sunday that's related to company earnings, and we'll have much more on News OK as we continue through this earnings season and continue to watch the price of oil.